made this bitch.
Okay, let's do this. Nice and slow. Okay, nice and slow. Let's put my chart. We're gonna do a little bit of a slow video today, guys. A little bit of a slow one. It's very important, all right? I'm sat here, dressed up, looking kind of clean. We're gonna pop a snooze, okay? I'm gonna pop a snooze as well. Let's pop it. Let's pop it. Okay, final snooze of the pot. Okay. Into the mouth it goes. Into the mouth it zoop. The zoopy. The rollies on. And if you guys didn't know, we're getting the AP. Okay, we're getting an AP, guys. Okay. Don't tell TGR. Okay. Oops. Okay. Oh, my rolly. Don't flash them. Okay. Okay, guys. Anyway, so we're here. Today's bias, all right? The most important. I'm going to make myself a little bit bigger now. Okay. Today's bias. It's extremely important. Low-key, the most important bit of trading. And I want to talk about how I trade bias, because what I do is I separate my bias into two things, right? We have one, which is going to be temporary, and one that's going to be full, okay? And with OTE, what did I say a million times? You guys can repeat it for me. OTE without the draw is gambling. We ain't gamblers, bro. We make money, okay? Gamblers don't make money unless you're like Togi or something, okay? Temporary, full. Got that in mind? I'm going to teach you how to use both today. Okay, and how we use it on the days, because you're not going to be going for that full bias on just an average day in Asia. You're going to go for that temporary, aren't you? Okay, not every all-time high is taken in Asia, is it? Is it, Peter? Is it, Stephen? Jamal? I see you trading, Jamal, and I see you just longing because you think it's going higher. You better be using a temporary, or else you're going to be losing all your trades, no matter what OT range you take. Okay, let's go through this. So, let's make myself a little bit smaller so we can do this. Is that small enough? Okay, sorry if you're missing my cute-ass face, but I'm using today's example. As you guys know, I made 12K today with my students in the live trading. Okay, you don't need to join. Obviously, I'm not telling you to, because I'm giving you stuff right now for free. So, let's go through this. So, I wrote some things out, as you can see, temporary and full. That's what we're going to divide the bias into, and then we say this. People always are yapping about bias. Daily bias. Bro, F word the daily bias and focus on draw. Because all bias is where price wants to go. But how do we even know where price wants to go? Is by identifying draws, okay? Now, I like to really split my draws into two really simple things. All-time highs, all-time lows. All-time lows doesn't exist. All-time highs and lows. Right? If we have all-time highs, we're going higher. It's going to be the full draw, okay? Let's say we're expanding all the time, right? Like when we're at peak all-time high phase, and every single day highs getting taken, that's going to be our full draw. But before we like to take those highs, sometimes we have to hit things or take things out on the higher time frames, and that's going to be our imbalances or our daily or our temporary draws, okay? Temporary draws. Imbalances are usually temporary draws. They can also be full draws. If we have a huge daily above us, that's a full draw. But temporary draws are draws that are going to get hit before we go to the full draw, okay? Today was a really clean example on how you could have caught that, right? So I've been also introducing a little bit of source right now, guys. I don't want to source up too much. There we go. I don't want to source up too much. I don't want to leak any of the biz. Okay, I don't want to leak any of the shiz, but I've been working on using lower RR with my model to help my students have a higher win rate, and currently I'm using it on my top step, and well, we are up 12K today, so as you know, I'm a higher R trader, but lower R and higher R is all dependent on psychology. Now, if the return is the same on high and low is more comfortable, you can trade low. Simple, right? Especially in this volatility, we're using higher stops, okay? We're using bigger stops, we're using belly stops, right? We're eating a lot, okay? So lower RR is what we're going to be introducing in this video as well, alongside the draw video. Back to being small, okay? Back to being tiny. Okay, now let's go through this. So today's example for draw was really simple. You jump on the charts, what do you see? Okay, we're going higher, probably going higher. The last days we're going higher. We'll, like I always say, we'll keep it simple. Let's look for longs. But before you guys want to look for longs, before you guys want to identify SMTs, before you guys want to do anything like that, we need to understand price is going to want to do some things, especially if this is before New York, we haven't swept inducement, and we're just ranging downwards for the big move up. Then we need to identify that temporary draw. And the way I like to identify temporary draws, like I said, is imbalances. Okay, now anything from let me write this down real quick. I'll make it really simple. 1, 2, D. No, that doesn't make sense. 1 hour, 4 hour daily. Okay, these are going to be really nice fair value gaps to look at for temporary draws. Okay, specifically the most important, which is going to be 4 hour. Okay, now on this day, before we like to have that pump, obviously PM and I mean end of the day PM. Like I'm talking like an hour before open, we decided to dump. That was because the move didn't get initiated. However, I still made my money before being trailed out on the longs. So let's talk about the longs and talk about the shorts. So number one, we identify the temporary draw. Like I said, imbalances. What do we have? We have a 4 hour unfilled. Now, lucky for us, our level was below the unfilled, meaning that we had valid ranges. Okay, so what is this? Unfilled 4 hour. Okay, we're going to label this as our temp draw. Now, when you're trading to a temporary draw, this is gonna have to get hit. Okay, when you're trading to a full draw, you can go break even, you can trail, obviously go break even anyways, but you can trail, and it doesn't always have to get hit because price is going to go in that direction in the general. It doesn't always have to get hit. Not every day does a high get taken, right? Previous day high, previous day low. That's another big misconception. Another really big misconception, guys, is people expect previous day highs and lows just to determine their bias every single day. There's been so many days where previous day highs and lows aren't going to get taken, right? And you got to focus on the direction price wants to go towards those highs. It doesn't mean you always have to TP at them, right? You can TP them finally. You can have like a final TP there, but if you want to trail a little bit and make sure that if it goes so far deep into New York PM and we're just consolidating, price is most likely not going to go up there. It's unrealistic, right? So let's numb this down once again. Okay. So the temporary draw was the unfilled 4 hour. How could you have taken this to your advantage? Two ways. Either you could have been very disciplined and been, okay, so I want longs, meaning if I'm trading OTE, let's identify the range and let's just wait for price to sweep the unfilled. Let's say you have some evals, okay? Right, I have some evals. I can risk, risk a little bit more on them. I understand that we have a temporary draw. Let's trade down to those temporary draws and let's trade up to those full draws on our funded accounts, just like I did today. So let's find that entry towards here, right? What do? So we've identified the temporary draw. This is the line of the 4 hour opening. This is where we TP if we're looking for that temporary draw. Now, what are we doing as well? We're just applying pressure to the downside by reacting off every single range. As you can see, we have more what's the word? We have more like conviction. Yeah, we have more conviction. We'd go lower because, as you can see, the past ranges have been playing. So we're thinking to ourselves, okay, so we really are just trailing and kniving down to this draw, the temporary draw. So let's look for our entry, okay? Now, the entry I took was really simple, and it wasn't even having stuff aligned within it. It was just a matter of discretion and my evals, right? So this is the third range that's got made. This range reacted from, this range reacted from, and this is the range that I was on the charts for, and I was like, okay, I'm going to take this trade, I'm going to TP at the 4 hour opening, right? So really simple. High to low. Third range, okay? Where are you going to enter? Low RR, if you're using low RR, you could enter at the 6.2, cover the whole of the ranges and TP here. If you're using high RR, the way that I traded was you can just enter off of the 705, since it's right above the inducement at the 6.2. Risk not getting tapped in, but then having a tighter stop loss in that case, okay? 20 even, right? Even 10 point would have held, but I'm talking about lower RR today, okay? Now, as you can see, price ends up going up here and coming down to our temporary draw, okay? We get tapped in, and price comes to our temporary draw. Really simple. Tell me how OTE isn't the easiest model, because all we're doing, pardon me, guys, all we're doing is we're coming up, we're reacting from ranges, small range, bigger range, biggest range, finally taking this draw out now, okay? As you can see, the 4 hours now been tapped. Now we're thinking, okay, temporary draw taken. Now it's time to look for the full draw. Now in this case, today I was bullish. Does that mean I have to have a draw? No, it just means I expected the all-time high to get taken. By all-time high, I didn't mean all-time high, I mean just the previous day high. I expect the price to go towards that direction since we are bullish in general, okay? As you can see, we are bullish. I expect now we've taken some kind of form of higher time frame context imbalances out of the market. Now we don't really have a drawdown to go to. And now how do we find our entry? Okay, so now we expect price to go towards here slash full draw. Really simple. Price doesn't have to actually go to that full draw, does it? Okay, but that's where we expect price to go in the direction of. Now, really simple, the trade that I took today, we use the entire range, 4-hour range, high to low. Okay, now with understanding that we have one draw correct. Now the draw is correct, everything else will come simple. Okay, my PC turned off for a second. That's a bit weird. Is my thing fine? Okay. Okay, so it's a little bit bigger right now. So now we have the draw correct. It's all about finding the entry. Now, obviously, waiting for after New York, that's when the distribution is going to happen, and this is when we get tapped in as well. Okay. So where would you enter in this case? If you're looking at a bullish range, what do we have? The 705, the 62, and the 79 all look relatively convincing. So you've got to numb down the most perfect OT level to take that trade with quite a big stop loss in this volatility in this range of a market. Okay. The 705 was the level I chose. Okay, let's go. Why did I choose the 705 in this range? Okay. I'm getting called by someone. I don't know who it is. I hope it's not HMRC. Let's just go through this. Okay, so we have an hourly order block, okay, really clean, and it's the opening of an order block. Now, guys, the opening of order blocks are super important. They tend to play more than CEs, especially if you have more aligned with it, and we did have more aligned with it. So not only do we have, let's just make this a line right now so I can actually write on this. So we have opening of 1 hour order block, number one. And what else makes the 705 valid? On the 4 hour, we have the CE of the 4 hour order block. Now, the 4 hour order block CE is going to be extremely important for us because when you have the consequent encroachment, which is the equilibrium of another order block within aligned with the 1 hour order block, it's like, wow, we're really stacking levels aligned with the OTE. And then the final piece of the pudding is to go deeper inside to the 15-minute. And what do we have? A 15-minute fair value gap aligned with everything. Oh, beautiful. Beautiful, right? So now it's safe to say, where do we know? Price wants to go towards the full draw. Okay, whether it does or doesn't, that's fine. You have 50-minute now as well. So now what do? We enter at this level. And I use the 50-point stop today, guys. Pretty big, but I've been implementing lower RR for higher win rate, okay? Now, my original TP was here, but as you can see, let's see what happens, right? I know price wants to go in this direction, so what do? We pump. I'm thinking, wow, okay, we're break even now. Okay, let's move up. I'm up like 12K in my trade. Price has this 50-minute to protect us, and we want to go higher. We end up consolidating, okay? And that meaning that price probably doesn't have the ability and the volatility to go all the way up to this high today. Okay. However, just having the sense of a draw where price really does want to go allowed this move to happen, meaning I still got taken out at 12K. Whether I trailed or not, my draw was correct. Whether we taken it or not, we identified the plan of what really happened today, which was this, right? Price went down, temporary draw taken. Now we're looking for longs. We identify the long level inside the OTE. We take that trade towards the full draw and we get break even or trailed out. Easy peasy lemon squeezy. I don't trail towards temporary draws, but I trail towards full draws because not every day does price have the volatility and the strength to go all that amount of points to go to the full draw. Really simple, guys. Really simple video. Pretty much done now. Let's just talk to the mic. that was just the day going over, but let's talk into the people again so you guys can understand a little bit more, so I can dumb this down. So, like, if you just took everything that I explained to you in nice and slowly, it was just this. Separating price on the day. Where does price want to end up? Where does it want to go fully? And then what do we have to take out before we go there? That's it. That's what distinguishes, for me, my bias every single day. Temporary, full. Nothing else. Simple. And I promise you, I have more accumulated payouts than any other fake mentor anywhere else. And you guys know I have a lot of proof for that. Okay? So, namaste. I hope everyone has a great day. And I love you all. Peace out. OTE paid.